Good morning, everybody. Welcome back to the Opportunistic Trader. It is 10:15 on October 8th, and we're joined by Phil Flynn of the Price Group and Fox Business Contributor. How are you, Phil?
Doing great today. Little computer issues today, but I think everybody can relate that deals with a computer. Because as I say with computers, you can't live with them, you can't live without them, right?
Definitely can't live without him.
Yeah, absolutely. But it was one of those mornings today. But we've already had some pretty big moves in the oil market today, haven't we? We've
Well,
almost
every
turned
market,
positive.
yeah, every
Yeah.
market. S&P just, right on the 9:30 open, the S&P was trading down about 15 points lower. The Nasdaq was down over 1%, and we're almost flat in the S&P. And like you said, oil's been all over the place. We traded looks like the Novi crude low is 73.07. Here we are at 74.22. So what are you thinking? What's the news?
I think that the market got shaken up a little bit on, the Chinese stock market and the European markets, and so we started to sell off hard early on light volume. But I think when people start to realize that China was on vacation last week, they actually cut interest rates, which is actually bullish for their market, as well as some of the emerging market concerns not being that big of a deal. I think the market started to come back. The same thing with oil. I mean, the main headline that pushed oil down over the weekend, was the emerging market concerns, but also a report by the Indian oil minister that basically said that they were still going to buy some Iranian oil next month and that they were going to move ahead, despite the fact that the Trump administration was going to um, continue to try to help them find alternative sources of oil. I think a lot of that's just noise right now. I think the Trump administration said that they would be looking at waivers for India because India is very dependent on Iranian oil and they need their oil and it's hard to replace. Last week, there were reports that the Trump administration was actively looking for extra barrels just so that they wouldn't have to buy oil from Iran. But I think it really is a testament to how tight the global oil market really is if you can't replace those barrels very easily. And so I think that this story, even though short term it's bearish because Iran is going to get to sell a few barrels of oil, I think it's really bullish because we're already finding out it's almost impossible to replace Iranian oil right now.
Yeah, well, it's like you said, we traded up we traded $77 last week, then came down. We basically low today, 73.07. So we're getting a lot of volatility there. Anything, so then we have API tomorrow and then DOE on Wednesday.
Actually, this week
Oh, I'm sorry,
because
that's
of the
right,
Columbus
Columbus
Day,
Day.
that's right, exactly, or Native Americans Peoples Day, or Leif Erikson Day, or ancient Chinese Day, depending on who you believe got here first. So we could celebrate all of them, right?
All in one. So right, so then API still comes out, I think, normal Tuesday afternoon, but then the DOE is Thursday at 11. Is that correct?
I actually thought that the API was delayed a day as well, so I better double check that. But I think there's a delay there as well.
Gotcha. What about anything that you're hearing, seeing in the equity markets? Like you said, China opened up after a week off, and Chinese markets were down about 4%, which was expected. That's where the ETFs were kind of projecting them to be opening. Any sort of news updates there?
I think the emerging markets had a heck of we had an election in Brazil. A Donald Trump like character, of course, has taken power. We're hearing in Italy, they're basically thumbing their nose at the European Union and say enough with this austerity stuff. Our people have got to eat. So you're getting the typical drama that you normally get in some of these emerging markets. And it's raising those concerns, at least overnight, that we're heading back to where we were a couple of years ago, before Mario Draghi declared he was going to do whatever it takes to save the euro. That maybe some of the debt issues with some of these countries are getting too far out of hand, and they don't want to do what it takes to please the EU. Um, I think this is far from a crisis. I think the EU is much more flexible than they have been in the past when it comes to dealing with some of these countries. And I think that they will be able to go into Italy, and they'll go into Brazil and these countries and make a way for them to comply, with the EU regulations, but at the same time get a little bit more slack. And some stimulus for their economy. So there's definitely this balance there in the EU as far as getting their debt, you know, paid off to the EU and not getting them further in debt. But at the same time, don't make the rules so strict that the economy is getting stifled, as they pay back that loan. So, but unlike Greece, I think we've learned a lot from Greece. If you remember the Greece, when Greece voted to leave the EU before they voted to stay. Basically, that's kind of a joke because they did vote to leave the EU until they realized their banks were empty the next day. And they're like, on second thought, maybe what we really voted to do was stay. We didn't really want to leave. Come on. We're just kidding, guys. It was just,
Well,
just a
on
joke.
that, it's pretty interesting because the Italian MIB is down 2.4%, DAX is down 1%. So the S&P has actually bounced like 12 points off the low, Nasdaq almost 1%, but the European markets continue to trade under pressure today.
Yeah. And they had some vacations over there too, so some of that might be overstated as well. But that's what was weighing on our market, and I think you're absolutely right. This disconnect that our market's able to come back while there's still turmoil in Europe makes you realize that in the big picture that the market is not really freaking out so badly. This is what makes it hard sometimes when you look at these moves when it happens when the U.S. banks are closed. Chinese had a holiday last week. The Europeans had a holiday. I do say that they know how to do holidays better than us. I mean, come on. What do they take a week off over there, a month off
I'd
over there? It
love it.
seems like it.
That would be
Thank
great.
you.
We could all
I
go
would
to
have.
summer camp for a week.
We could. I don't know what I would do. I would have to find a summer camp because I don't know what else I was. I was getting bored Sunday yesterday. Um, but so yeah, so I think some of these markets are disjointed a little bit, but you put it into perspective. The Italy economy is a very small part of the EU. The EU, of course, has been very adept at blowing out economies that are in even worse shape. As far as our austerity goes, I think that they realize that they can't choke off these economies and the people have to live and have a normal life. So I think these situations and I think the markets rally here is really good.
Yeah.
Here we are seeing the headline here. Treasury is very concerned about
Well,
China
that's
currency
exactly what I was about to
depreciation.
bring up.
Yeah.
So the headline was U.S. Treasury Department official says U.S. is concerned about the China currency depreciation and it's monitoring the developments, IMF. And so it's pretty interesting. On that headline about 10 minutes ago, dollar China dropped about 0.2%, but we're rallying almost all the way back. And so I have the 5-minute chart up for everybody to see, and now I'm changing it to the daily chart. And you can see we're basically at the high of the year right here in dollar China. And, we're seeing the dollar trade stronger pretty much across the board. And, we've been saying this for months and months that a lot of the main focus for FX really is out of China. And so, China, ever since the beginning of these supposed trade wars and trade tariffs, dollar China has weakened dramatically. And so that's one way of them kind of deflecting those sort of losses. And here we are, and we're starting to see Treasury officials becoming a bit concerned, as they're saying. So we'll keep a close eye on that.
Well, I know they're concerned, but they shouldn't be surprised, right? I mean, because the only reason China has to do this is to stay competitive because the trade war from Donald Trump started to have an impact. They have to do what they can to, basically keep their economy going. And one of the ways they're doing that, of course, is by adjusting the interest rates, where the U.S. Treasury is saying, hey, wait a second, here you guys, here you go again, right? This is part of the problem is that you're using your currency manipulation, to give yourself a competitive advantage. And so yeah, you can be concerned about it all you want, but you're going to probably see more of that coming out of China unless they come to the table on the trade negotiations because their economy domestically is going to continue to slow. until they come to the table. I think there's even more pressure on the Chinese after the NAFTA 2.0 went into effect last week, right? China's the odd man out right now. And so they had to do something because their growth is going to slow a bit. And that's going to, of course, put more pressure on them. Now, from my viewpoint, as an oil guy, I think it's wildly bullish. Every time China's done this for the currency, we've seen an uptick in energy. The little teapot refiners that you read about start buying more oil. Their economy gets a little bit of a sugar high over there. And so we think from an oil viewpoint, the currency cut is actually bullish. The bearish case on oil with the China trade war is that their economy is going to slow down. They were going to import less oil. Now with the stimulus, some of those concerns should go away. So it should actually be bullish, regardless of the fact that the dollar is going higher.
Yeah, well, that is the interesting part because typically what's been happening is with the yuan weakening, it's a stronger dollar across the board, which is typically not good for oil. That said, as you point out astutely, crude's typically been outperforming in the face of that. I mean, look where we are year to date. Crude's having an exceptional year.
And I think, from where crude is right now, we're probably going to be consolidating. And I don't know if I said it last week. I might have. If I haven't, I'll say it now. I think $75 was kind of a pausing point for us in the oil market, kind of a shorter term target. And I think until we get closer to the actual sanctions at the in the beginning of November, I would have to believe that if oil got $2 below $75, I would think it would be a pretty good buy. And if it got $2 above 75, I think it'd be a good sell. So I kind of think that's your trading range, So when we were in the low 73s today, I was like, that's a pretty safe buy.
Here's the question for you, Phil. Have you been asked yet? You do all sorts of publications everywhere, Fox Business, through Price Group, through everything. You're everywhere. Have you been asked yet, are the high oil prices going to be affecting Christmas shopping? People going to be buying less Christmas time because of the high oil prices?
You're the first person who's asked me, but that shows the season is coming.
Well, I'm saying it's coming.
Exactly.
It's only a matter of time before you start getting those questions because I was just looking. We're about 2 months away. And,
I would say, obviously the disposable spending when gasoline prices are cheap, generally speaking, people will spend more on shopping, generally speaking, because they'll have more money in their pocket. That's the common line. But I don't think you also though have to put that into context, because even though gasoline prices are the highest they've been in 4 years, going into Christmas, we haven't had an economy like we've had like this in 20 years, right? So we have a much stronger economy, and while gasoline prices definitely have an impact on consumer sentiment, we're going to have to balance that with the fact that consumer sentiment's at almost an all-time high, or just off an all-time high right now. That consumers are making more money than they have in a long time. Their job prospects are the best they've been in a long time. So the answer is that the jury's still out. I think that if gasoline prices continue to spike dramatically, which they have a chance to until the end of the year, that could impact some Christmas shopping. But if we go up in a more measured pace, even though we're at the highest level we've been in many, many years, I think because people are doing better and feel better about the economy, that it's going to, actually, I think we're in for a pretty good holiday shopping season.
Yeah, well, it'll be interesting. I was only bringing it up because, oil prices are at the higher levels, gas prices are at the higher levels.
Well, I'm glad you prepped me on that, because I know I'm going to get 15 more questions every day. Is this going to ruin the Christmas shopping holiday? There it is. Is this going to be the Grinch that stole Christmas? Could be. Who knows?
Yeah, those are all the headlines you've had in the past with that they've asked you or started a segment out with.
Yeah.
All right. Well, sorry about those technical difficulties before, but thanks for the
worries.
info.
I think we got through it, and we'll figure it out next time. And hey, have a great trading day, everybody.
All right. You too.
Thank you. Bye-bye.
Thanks, Phil.